All right, I want to show you how typically when you have payroll outsourced to a full service payroll company, how they typically handle the wages and paying everybody and how that impacts your books. Okay, so this is a sample. I'm still using our sample company. If you did anything with the cash clearing account or anything like that, um, then this is set up for that. So this is an actual payroll report from an actual company, not this sample company. So things aren't going to align quite right, but I want to show you how it all works. So first thing I want to show you is I'm going to go back to our chart of accounts. And if you did watch the video about cash clearing and about sales journal reports, one of the things that we recorded in our sales journal was tips that were collected. So I'm going to go down to the current liability of tips collected, view the register, and we can see one day we collected $10 and one day we collected $40 in tips. Okay, and this was that just a mock-up sample company. Okay, now actually for this company, what we're going to record, because I want to show you exactly how to do it from a payroll report, we're going to wind up recording $1,196.27 in tips. So it's going to throw this way off. It's not going to be accurate because these two journal entries did not reflect this. Okay, they were a different scenario. Okay, but basically what this shows, the way this payroll company handles it, is they do two withdrawals from the company's checking account or payroll account if you got a separate one for each paycheck. One is the net pay that went out to all of your employees, and then they cut checks or they did all the direct deposits themselves. Okay, and then the other is the taxes, federal and state and local, that needed to be pulled out. Okay, so if you just record the net pay one as wages and the taxes as taxes, your books are going to be incorrect because the net pay is the gross pay that you paid them with the deductions that had to come out of their paycheck subtracted from it. And then the taxes are not the amount they pulled out for taxes is not the full liability of what the company had to pay in tax. It's a combination of what was pulled out of those employees' checks and what the company was on the hook for. Okay, so to make sure that your profit and loss statement is correct with wages and actual payroll taxes that the company had to pay, and that your payroll liabilities stay in check of what you've collected out of your employees' checks and then got submitted in tax, then you would need to create a split expense entry. Okay, there's multiple ways to do this. This is if you have this type of payroll where they're just taking two paychecks or two withdrawals from your account, one for wages, net wages, and one for tax. I think this is the easiest way to do it. So in this scenario, we're going to go up here. Since we have a tips account, and then this is payroll or wages, okay? And then over here, this amount over here, this 835.43, that is how much was deducted from payroll of the employees for taxes, payroll taxes, okay? And then this 523.62 is what the company had to pay in regards to tax. So the first thing I want to do, I know we have a tips account, and I know I'm going to make sure we have a wages account for wages or payroll. I don't see any of those in our sample company. So I'm going to go ahead and create that. I'm going to say new, and I'm going to say wages, and the account type is going to be an expense, and it'll be under payroll expenses, or we could choose payroll wage expenses, either one. Okay, so I'm just going to choose payroll expenses, hit save. And then we also need to set one up for payroll tax expense. And this is what what the company has to pay. So I'm going to make that an expense, make that a payroll tax expense, and hit save. And then we also need I always call it employee withheld tax liability. And this is a current liability, and we could put it as payroll, but I'm going to put it as other current just because it gives us a little more versatility inside of QuickBooks. And I'm going to hit save. Okay, so now we have those accounts. And now what happened is from these employees, there was $4,887.64. That was the net deposit. Okay. And then, so that was pulled out of our checking account. And then a total of $1,359.05 was also pulled out for taxes. This is the amount that was pulled out of the employee's check, and this is how much the company owed. So here's how we would do this. So I'm going to create a new expense. And you could put in whoever does your payroll if you want. It's coming out of the checking account. And then for this first one, we're going to cover the wages. Okay, so our first category is going to be payroll. I think I called it wages. So here's wages. And we want to put the total amount. Now in this case, I'm going to put two different rows for wages because this company keeps track of hourly and salary. So just so that we have it where we can match up the reports really easily, you could just add these two together and put them under wages. But I'm going to put in the hourly and the salary just so that my reporting in QuickBooks looks exactly like the report that the payroll company puts out. It's kind of a preference. So for the hourly was $3,372.96 and the salary was $1,153.84. Okay, so now this amount is $4,526.80, and then we still have tips. So we're going to put in our tips liability account. Okay, so this is going to subtract it back out. We added it up before. I know it's incorrect because it was like $50 or whatever, but then this one would be $1,196.27. Comes straight off the report. Now you can see we have $5,723.07 as our total here. That's more than what the payroll company pulled out in this transaction, because what the net was from the this is the gross pay, and then this is the amount of tax that was withheld from their paycheck. So this is where we put in the employee withheld liability, and then we go over here and we create a negative for this amount that was pulled out of their check. So negative $835.43. And then when you tab or click in another box, now you can see our total here is $4,887.64, and that matches what they took out of the bank. Okay, now what you can also do is you can download a PDF of your payroll report, and you can attach it to this expense so that if anytime you have a question of where these numbers came from, you can pull the report up inside of QuickBooks. Okay, so I'm going to go ahead and hit save and close. And then we need to create the other expense transaction, which was $1,359.05 for the taxes. So I'm going to create a new expense again. So new expense and checking account. And I'm going to go down here, and so we have our employee withheld. And this time it's a positive number. Last time it was a negative. So what it's going to do is it's going to zero out that liability account, and it's $835.43. And then I'm going to find our payroll tax expense category that we created. That's going to show up on the P&L, and that is for $523.62, and that totals $1,359.05, which is exactly what the payroll report said. I'm going to hit save and close. And now let me show you how all that has played out. So now if we look in our checking account register, you can see here are the two transactions. And then when they would clear the bank and come in through the bank feed, you'd be able to match those up and you wouldn't have to do anything else. Okay, now let me also show you, if I go back to our chart of accounts and I go down and go to our employee withheld sales tax or tax liability, it shows zero here, but if I go to the register, it shows the in and the out. Okay, then if I look at our tips, now this is off because we didn't record the tips coming in from point of sale correctly, but because this was a different scenario. But you can see where it pulled those amount of tips back out. Okay, so that one's taken care of. All right, so if we run our profit and loss report and scroll down under expenses. Then we can see down at the bottom is wages, and that's our total amount of wages. Okay, if you want to review that, you can click and it'll take you a step backwards, and then we can see here was the gross amount that we paid in wages, hourly and salary, and then the tax that was taken out of their checks, that was subtracted or taken out of the liability account or recorded over there. Okay, and then we have over here our payroll tax expense. This is what the company actually had to pay. Okay, so this was part of that combined amount of the 1,300 or whatever that was. Yeah, 1359.05. So it took this and used it to zero out that liability, and then this was the amount of tax that the business actually had to pay on behalf of its employees. Okay, so when you have a payroll company that does 2 withdrawals and then they take care of all the direct deposits directly to the employees from there, this would be the way that you could properly record it in QuickBooks.